request my colleague, Agnes, to commence with a word of prayer in line with the core bank tradition, even as we move to the next stages. Agnes?
Good morning, ladies and gentlemen. My name is Agnes. I support business customers at Business Banking Department. Let us believe and pray. Father, in the mighty name of Jesus, here before your presence this morning, with thanksgiving in our hearts, thank you for the gift of life. Thank you for the gift of good health. Thank you for the gift of jobs. Thank you because of the gift of our businesses, dear Lord. We ask you, Father, that you're going to give us, you're going to help us, Father, as we go through this meeting, Father. We pray, Father, that you're going to help us, even in our businesses during this strange time of COVID. We pray for our country, dear Lord, that, Father, you're going to bring stability, my God, so that we can be able to have our customers back at our feet, at their feet, oh Lord. Lord, we pray for the bank that you're going to give us favor as you engage our customers. We pray that, Father, you're going to help them, Father, where they're ailing in terms of repayment of the loans, oh Lord. You're going to intervene and bring stability to their businesses. In Jesus' name we pray and trust. Amen.
Amen. Thank you, Agnes. Thank you, Agnes. And as we move on, in line with what we have slated for the day, moving on to the next slide, you will see what we have planned for this very morning. And the agenda for today, we have a keynote speech from Samuel Omukoko. We'll tell you more about Mr. Samuel Omukoko as we get there. We'll also get to hear something on loan management from a business banking customer perspective. We'll also get to appreciate the solutions available for retail customers, and that will be handled by somebody else, after which we shall move to the question and answer session. We anticipate a very interesting conversation, and for that reason, we will have a separate session where we will have the Q&A. Of course, as we begin, you appreciate we are slightly late, but we know we will catch up. We are about 8 or so minutes late, but we believe we will be able to catch up in due course, and our sincere apologies for that. Just some important information. You'll note that the video and the microphones function is muted, and for that reason, you may not be able to talk or to bring your video on. Just for purposes of coordinating this session, we've had it that way. So the available channels are that you can use the chat function to make your comments. Moving on, you'll also appreciate that other lines are available, and you can also share your feedback as we progress. We'll be giving you the email address, the phone numbers, and the other channels that you can use to reach us on. You can continue to share your feedback as we progress. Feel free to drop your message on the chat or send an email, and also share the reactions based on how the speakers engages as we progress. And lastly, I think what we want to share is that we would want you to enjoy the session. Now, moving on, as we appreciate what comes up, we'd want to just have this as a two-way communication. So on the chat function, and we can do it even as we continue, you can indicate your name, you can indicate your location, and also your expectations from this particular webinar. I can see quite a number of comments currently coming in on the chat function. Please tell us what your expectations are on this webinar, and also key learnings where possible. And of course, most importantly, would also be the questions, because we'll have a separate session, as we've seen earlier, on the Q&A, where we'll be addressing the questions that you have for us. I think as we start off, it would be good for us to get the opening remarks. And for this, I want to invite Moses Getao, who is the head of business banking, just to make his opening remarks even as we progress. Moses, please.
Yeah, thank you. Thank you very much, Patrick. The Group Managing Director and Founder, Metropro CRB, Mr. Sam Omukoko, distinguished customers, my colleagues in Cooperative Bank, ladies and gentlemen, good morning. I wish to welcome us all to this Cooperative Bank online webinar. And as Patrick has mentioned, we are discussing a very important topic today, which is on managing managing the non-performing loans. And I think we'll also be discussing on how to leverage on CRB help us in terms of qualifying for financings. Non-performing loans cut across all the sectors. And that's why in today's discussion, we have invited customers in business and individual customers. Those are people who are salaried, just to help us appreciate how then we qualify for facilities. So that's why we have invited you in that category. The second thing is that CRB is an emotive issue. And I think out of the feedback that we've gotten from the several webinars that we've run for our customers, we felt that we needed to invite and give Sam Omkoko, the MD of Metro Pro CRB, some time to just elaborate to us and show us exactly then what we need to do so that it can help us improve the credit scoring that we have. After the MD shares, I'll also be coming in to share about how do you qualify, how do you leverage on CRB. I think I'll also be sharing that. And lastly, we'll have Jackson Wendo coming in on behalf of our head of retail banking, Rena Lego, to discuss about the salaried customers, the consumer customers. What are those available options for you? And also as a salaried customer, how then do you leverage on the CRB? The session, as said, will run for 1.5 hours. But I think the most important part that perhaps I would want our customers to participate also as they listen to us, I would want you to engage us through the chat box, give feedback, share your questions, so that we can all learn from each other at the end of the day in terms of the discussions, the feedback and the questions that will come through. So it's my now humble honor to invite the Group Managing Director, Metro Pro East Africa, Mr. Sam Omkoko, to come and share his remarks. Sam, if you're on the call, you can join in. Let's go to Sam. Karibu Bwana Sam Omkoko.
Thank you very much, Moses. Thank you, Patrick. And good morning to everyone. It's a great pleasure to participate in this webinar. And I've prepared a bit of information that I think is relevant to a credit function. And I'm sure that participants should be able to find value in what I say. Now, Metropole Corporation as a company was established in Kenya in 1996 as a business information company. Metropole currently runs 4 lines of businesses. The first one is the CRB in Kenya, which was licensed in 2011. We're also licensed as a CRB in Uganda. This happened in 2015, and we are progressing our CRB application in Rwanda and Ghana, just to be able to have a good footprint on the continent of Africa. Our second line of business is credit rating. And as a credit rating agency, we are licensed by the Capital Markets Authority of Kenya and the Capital Markets Authority of Rwanda. We have a support function which supports the CRB business, which is focused on lending, and that is a debt collection arm. But we only operate this in Kenya, and we support lenders in the debt recovery process. The fourth function line of business is the newest line of business, which is Metropole TV. And Metropole TV is the first 24-hour business channel in Kenya. It is available on Signet, but we are processing applications to go to DSTV and GoTV, and that business is regulated by the Capital Communication Authority of Kenya. And so that is how a Metropole Corporation looks like. Now, in line with today's agenda, I would like to focus on the CRB business and just give what is the core value of the CRB business? Why do we have the CRB business established in this country, and why is it core to the lending function of banks and other related institutions? Now, many of us do recall that every time we go to the bank, and for a long time, banks would always ask you for collateral, and that collateral would be in the form of an asset, title deed, or a guarantor. support the application that you are posing to the bank. If you have multiple accounts, banks will ask you whether you have to give them bank statements and for all the accounts that you run. And in many cases, they would require that you run that account for 6 months so that they can be able to see your banking activities. That was the norm for a long time in the banking industry in this country. But what then happens is that because of what we call information asymmetry, lenders would not get all the information they required from borrowers. And because of that lack of transparency on the part of borrowers, lenders always insisted that they must have security or collateral to support the customer's credit application. And many of people who did not have this collateral could then not be able to access bank loans. And the most affected were actually small businesses and individuals who did not have steady jobs or were not in permanent employment. Now, we witnessed for a long time collapsing institutions, particularly banks, that collapsed with customers' money. And most of the time, you would find that the customers would move from one bank to another, taking loans and leaving a trail of bad debts. And banks, faced with this challenge, would then want to charge high interest rates to compensate for the loans that they could not recover. And that kind of situation, obviously, for an economy that is growing, then becomes unsustainable, because then credit access becomes a difficult thing, and only selected people can get to access credit. And even in terms of how the banks grow their businesses, growth then becomes a very slow process. So the credit, to be able to deal with the information asymmetry challenge, an amendment was done to the Banking Act in 2007 to allow banks to share information on their customers. This amendment, initially the request was that a bank should be able to share all of the customers' information so that that information is always available whenever a bank is processing a customer's loan request. But when the regulation was passed, the banks were only mandated to share default information on customers. That regulation also provided the mechanism by which credit reference bureaus would be established in Kenya. So the 2007 amendment to the Banking Act gave birth to the CRB regulation 2008, which provided the rules and regulations that would guide the operations of credit reference bureaus and how customers would then engage with CRBs. Now, the key highlights in those regulations were that banks would submit all default information on their customers to the credit reference bureaus, and the credit reference bureaus were then mandated to make sure that they avail customer records to banks whenever banks wanted to find out the history or the credit history of those customers. It then became an established perception issue that one was in the credit reference bureau because you are a defaulter. So only people or borrowers who had defaulted were sent to the credit reference bureau. The other thing was that the listing in the credit reference bureau was supposed to stay there for 7 years before it is then erased from that particular record. And these two issues became very emotional, because sort of like it also assumed a social dimension. If somebody hears that you are in the credit reference bureau, then they immediately come to the conclusion that you are the type of person who borrows and you don't pay your debts. And therefore, that comes with sort of some negative perception to that. So we moved like that from 2007 up to 2013, when another amendment was passed in the CRB regulations 2013 to allow banks to share all borrowers' information, whether it was good or it was bad. And this amendment then came with other changes also. It reduced the retention period of credit information on the reference bureau from 7 years to 5 years. And it also allowed other institutions like SACCOs, microfinance institutions, and trade credit suppliers to also join the credit information sharing mechanisms. So the bureau files then started becoming richer with customer information. So many of the SACCOs joined the mechanisms, microfinance institutions joined the mechanisms. Fintechs also got an opportunity to jump into the lending market because now there was a single point of reference that they could be able to know the credit history of a given customer. And given that credit history, then it was easy now to start extending credit via the mobile platform, because then it was not necessary to have a physical interaction with the customer. So the introduction of credit reference bureaus, obviously what it did was to expand the credit space, reduce the time it takes to process a credit application, and where customers had sufficient information on their credit profile, then the collateral requirements in certain cases got relaxed, particularly when it came to individual borrowers and those who had a good credit history. So I need to state at this particular point that the core value proposition of a credit reference bureau is that it enables a borrower to build a credit history on all of their borrowings, whether they are from banks, from SACCOs, microfinance institutions, or trade credit suppliers. That credit history then creates what you call informational capital, information that tells you the behavior of a borrower when they take loans from the various lenders that I have listed. The Credit Reference Bureau also calculates a credit score from this information that is in the credit, in the borrower's credit profile. And that credit score becomes a measure of the credit worthiness of that particular borrower. So you'll find the scale of the credit score runs from 100 up to 900. Any score that is below 400 would indicate a high risk of default, and scores starting from 500 all the way to 900 increasingly show a customer who has a low risk and who is servicing their debts. This is then becomes the value that is derived from credit information that is maintained by the credit reference bureaus. Now, in terms of the use of this information, banks, lenders always reference on the credit reference bureau files to understand the borrower's credit history. And how they use that credit history is simply to understand the behavior of the borrower. So the credit history or the credit score is a measure of the behavior of a borrower given the credits that they have been taking. It will show all the loans that have been taken, and it will show the servicing trends that exist on those loan products, and it will show the ones that have been closed and the ones that are coming onto the file as new borrowings. There have been also amendments going further as the credit bureau mechanisms got entrenched in the country, and the new regulations that were issued last year in April, the CRB regulations 2020, do now provide that banks should use customers' credit scores to assess customers' creditworthiness when they are seeking for credit from banking institutions. And therefore, in today's borrowing environment, the credit score has become the single most important criteria that any lender will be looking at. So if you see the development, we started from where the Credit Reference Bureau was being looked at as a blacklist. Then we moved from the blacklist to a full credit profile, which now is a record of all borrowings that you have. And we have now moved to say the value of the information that you have on your credit profile is now being turned into a score that now measures your creditworthiness. That score then becomes a very important tool that the lender and the borrower can use to be able to assess the customer's credit requests. And so in a nutshell, from a borrower's point of view, borrowers should know that what goes into the credit score is all the borrowings that have been reported by all the lenders that they have taken loans from and who report to the Credit Reference Bureau. And therefore, what that means is that the borrower needs to understand the value of that credit score. Now, that credit score, first of all, is a ticket that allows you to access credit, because every lender will look at it. If you have a good score, lenders would want to give you credit anytime you ask. The other value for that score is that in the current environment where you can negotiate for a good interest rate, your score can give you a basis of engaging a lender to negotiate a score, an interest rate that is applicable to you. For example, if your score is 500 and someone else's score is 850, obviously the person who has a score of 850 would get more favorable terms and a lower interest rate because they are deemed to have a low risk of default, as compared to somebody who has a score of 500, is therefore deemed to be carrying a higher risk, and therefore probably the bank would be, or the lender would be a bit reluctant to say, okay, I will lend to you, but because of the high risk you carry, I'll probably charge you a little bit more higher interest than the market is offering. Because I want to do business with you, but the risk you carry is such that I need to protect myself. In other cases where the credit score is low and the lender has a high appetite of giving credit, they may request that you provide additional collateral, like a guarantor, to support your borrowing because of that high perceived risk. But I think that going forward, borrowers must then understand that it is important for you to monitor your credit score and understand what it is communicating to the lender. Banks, on their part, are mandated by central bank to ensure that every time they are looking at your credit application, they must use information available in your credit profile maintained by the Credit Reference Bureau. And therefore, it is not something that it is an option. It is mandatory for them to use that information. And whenever what most banks will do is to take that information and combine it with their internal credit appraisal process and policies to be able to determine who gets a loan and on what terms do they provide that particular loan. I need to finish by saying that the credit reference profile and the credit score are behavioral. They are simply tools that tell a lender how a borrower behaves when they have taken credit. They do not measure the capacity of the lender in terms of the cash flows that the lender has, particularly, I mean, the borrower has, particularly when it comes to businesses. Businesses generate revenues from a number of activities, and just focusing on their borrowings in their credit reference bureau would not be able to tell a lender how much credit that particular business should be able to take. And therefore, there is another another metric that is required to provide the full answers to what a lender will require. A lender wants to know your character. A lender wants to know what capacity you have in terms of how much credit you can take. A lender wants to know what terms they can give in terms of short-term borrowing or long-term borrowing. Banks these days can give you loans up to 5 years, up to 7 years. Information on the Credit Reference Bureau cannot be able to predict behavior for that length of time. And therefore, a rating then becomes important to now be able to look into the future. Remember, the credit score and the credit history on your profile is about your past. It is showing loans that you have taken and how you have behaved with those loans. To be able to predict how you will behave in future, another metric, which is a rating, is then required to supplement the credit information that is on the front, on your profile. And therefore, a rating is then provided. And what that rating then does, it takes into account your credit reference bureau data and other business parameters and combines this into an algorithm that is able to predict the probability that you will service a loan or default on that loan if you are given a loan. And that is now the other metric that we as a company have also come up with. And this is what is then constituted in the credit rating that we are licensed by the Capital Markets Authority. So we assign credit ratings to small businesses, starting all the way from micro, small, medium, and to large corporates. These ratings are useful in predicting future performance of a loan. And therefore, if a lender is using ratings, they have the benefit of knowing your past and also the benefit of being able to predict how you will behave in future when you take these particular loans. In this country today, many businesses are now beginning to embrace ratings. We have been doing ratings on small businesses. Up to now, we have rated over 800 small businesses and a number of large corporates that can use the ratings to go and access credit from the banks. If I have to finish, I want to focus on the MSME, the micro and small enterprise business, and just to understand how can they use the bureau mechanism and the rating mechanism to be able to improve their access to credit and also be able to get favorable terms that lenders can provide. In this country, every time you access credit, that information, if it's from the banks and SACCOs that are participating in the credit reference mechanism, that information will always be in the credit reference bureau. So every time you want to apply for a loan, do understand that lenders will check your credit profile and will also get your credit score. So it's important that as a small business, as a business, you understand what has gone into your credit score, and you need to check that your credit score does reflect the performance of the credit facilities that you have been taking. In terms of empowering you to be able to negotiate terms with lenders, you need to go another step and get a credit rating. For small businesses, it is not expensive to get a credit rating. A credit rating can be obtained for as low a fee as 5,000 shillings, going up to 15,000 shillings, and it is valid for a period of 1 year. And you can use it with any lender, any circle, any microfinance, or even a trade credit supplier who is giving you goods or services on credit. To that extent, you can then now take control of managing your borrowing, ensuring that you take credit that is suitable for the purpose for which you want, and don't just take credit for the sake of it. If you are looking for credit for working capital, make sure that you are taking credit that will support you in working capital. If you are taking credit that is to enable you to do a project or purchase an asset, you take credit that has the right terms to fit the purpose for which you want. You will be saved a lot of time in terms of the back and forth, if you go to a lender knowing what is on your credit reference bureau profile and also having a rating in your hands. With these tools now, we can be able to solve the old age MSME conundrum where access to credit has always been a challenge, and that in this market, I think that challenge has now been solved. I can only close by saying that Cooperative Bank is a very proactive bank, and in terms of using information tools that are available to assist them to assess credit facilities from customers, they are very ardent at that, and I'm sure that the partnership that we have with them will benefit you as a business to ensure that you are able to access credit quickly and as fast as you can from Cooperative Bank, using the tools that Metropole does provide from its credit reference bureau and credit rating services. Thank you very much for listening to me.
Thank you, Bwana MD. Thank you for your time and your words of wisdom, and for demystifying the whole issue around the Credit Reference Bureau. Ladies and gentlemen, that is Mr. Samuel Omukoko, the Managing Director and Founder of Metropole Corporation, and he will be with us to the very end of this session just to respond to the questions during the question and answer session. Please keep them coming, because as we can see on the chat, quite a number of people have joined. So Peter Osiemo says he's joined from Kisii, Galgalo Gilo from Isiolo, Njoki from Narok, Tony Mboyo from Kawangware, Eric, Musiemi Muli from Huruma. Quite a number of people who have already joined, and an interesting conversation we are seeing on the chat, because quite a number of questions are coming through. Benjamin Kimoi from Ngong, and I think you attended through Ngong branch. Please keep these questions coming. As promised, we will be attending to this during the question and answer session. Thank you, Bwana MD. Please stay on to the very end for the Q&A session. A very warm welcome if you're just joining us. And managing non-performing loans is a very topic of discussion this morning, where we are bringing our thoughts together to see how we need to be leveraging on CRBs to access financing from financial institutions. Remember, to join this conversation, you can leave a comment on the chat box below, or send an email to businessbanking@copbank.co.ke, or call us on 0711 049 129. Better still, you can call us on 0711 049 908. One more thing I would want to mention is that today, ladies and gentlemen, is International Youth Day. And what we notice is that as more and more Kenyans venture into business, of course, both young and the middle-aged alike, our next speaker will be guiding us on how we can look at the key elements of loan management for the business banking customer. And to take us through this is none other than Moses Gitau, the head of business banking at Cooperative Bank. And as we engage with Moses, let's see how, in our different capacities as different people in this country, we can leverage on the available options for prosperity. Moses, please feel free to come in to guide us in this very area.
Thank you very much, Patrick, and thank you very much, Sam Omukoko, MD and founder Metropole CRB. And I think before I even go to my presentation, I would want to highlight 2-3 things that I've picked from that presentation, so that even my customers, the MSMEs and the individual customers who are here, perhaps would also be thinking about. Number one is to say that, and I think Mukoko has clearly said, since we went CRB way, the CRB score, banks have improved on turnaround time. The time you take to get your money, I think there's a lot of improvement. Traditionally, banks used to take too long in terms of a decision of whether you are getting the money or not. I think there is a lot of improvement. The second thing, and I think I'll also be linking to that, is the issue of collateral. I think for those who have been there for some time, will tell you that banks will not give loans without any collateral. So I think Sam has said, which is what then I'll also be talking about. Banks now can even give money without necessarily having a title, without necessarily having a security. And I think the third thing that I would also want to highlight from Sam's discussion is that the amendments he has talked of in the CRB amendments that were done in 2020. How does a customer assess the credit worthiness? How the score enables you to determine the credit worthiness of the customer as an institution? I think he has talked of that, and I think that comes with both the positive and the negative listing. So even the information, the positive listing. So let's not only look at CRB as a negative tool, but it's a very positive. The positive information that comes there helps us in terms of the bank determining, or the renter. Let me use the word renter. Renter determine the credit worthiness of the customer. I think the last one is the issue of CRB score is behavioral. So the bank then will go to the other, or the renter will then have the other parameters. You look at the other parameters to determine whether you qualify for the facility. So I think those 4 points came out prominently in the discussion by Sam, and I needed to highlight for my customers. So straight now then to my presentation, and how now cooperative bank, or as a lender, then we link you to this discussion. Just stay to that on that side. What are the available solutions for business customers? And I think there are basically two needs that a business customer has. Number one, it's what we call working capital, and working capital is a short-term facilitation into the business operations, the day-to-day business operations. This will be either you're purchasing stocks, you are paying salaries, you are paying maybe you are acquiring space, you are paying for rent, all those small operational issues that will run into the business. I think helps you in terms of working capital. And that's why Sam was talking of the short-term facilities that you acquire from an institution. The second thing that comes in for a business customer, the second need is what we call investment capital. Investment capital is short of a bit long-term. It's long-term, and this will go to things like purchase of land, purchase of property, purchase of equipment, and even motor vehicle, things like construction. Those are what we call investment capital. So that is the second need, is either working capital or investment capital. I think let's go to the next slide, Patrick. The next one is, what are the key considerations? What do we consider as an institution, as a lender? What would a normal lender, any other lender look for in terms of assessing your request? We look at the market, the location, the traffic flow. We look at competition. We also look at the demand, and of course the risk assessment. And CRB has come in handy to help us in terms of assessing the risk. So part of the consideration will be also your score, and that's what Sam was telling us. We'll be looking at, for a business customer, we'll be looking at the existing. How long have you been in the business? How long have you done that business? We'll be looking at the legalities. Is the business you are in, is it a legal business? Because as an institution, then we have the obligation to support the legal activities for the country. Does the business have cash flows? And I think Sam has mentioned about cash flows. Critical to say, does the business has cash flows? Because the repayments that are expected will only come from where? From the cash flows. Where is the borrower banking? I think a very key consideration to say, any lender will look at the bankings that you are doing with them, and anywhere else that you are doing the bankings. Then are you licensed? If you are operating within a certain county, are you licensed by the county? Are you licensed by the bodies that license the businesses? I think then we'll be looking at the licensing aspect of it. We will also be looking at the business type, because it could be a sole proprietor. We rent to a sole proprietor. I think the renting is different from when it's a partnership, from when it's also a limited company. So look at the type of business. How have you been registered as a business? The other thing is the management. And I think this comes in terms of the skills, the experience that you run that business. That is very key. And Sam has raised a very important point to say, there are those 5 C's that we consider. And the 5 C's, just to bring it out, the 5 C's consist of character, which is the character of the borrower, and to a large extent, the CRB score will show that. Some historical whatever will show that, data will show that. The second C is capacity, and capacity shows the ability of the business to generate cash flows, the ability to repay. The third C is on capital. What is your contribution into that business as a borrower? What is your contribution into that business? The fourth C is on collateral. And collateral, we mean you are looking for security, because as I said, we have cases where somebody can qualify for unsecured, but you also have cases where somebody is required to provide a collateral. So collateral comes in as the fourth C is collateral, which is also security. And the fifth C is conditions. And conditions comes in when there is that agreement between the borrower and the borrower and the renter to say, I'll lend to you money once you meet this condition A, B, C, D. And those conditions then you have to meet as a borrower for the renter to extend the facility to you. So the 5 C's then is character, capacity, capital, collateral, and conditions. I think those are very key in terms of now determining whether the renter will be able to unlend the money to you. And maybe for business customers, you need to note those 5 C's. The next point is to say, what are those basic requirements? What are those basic requirements that you'll be looking for? They are very basic. Is a bank operational account. The existing business, I think I've mentioned about that. The documentation and records, because the banker will want to see some records. If you are in a business that is trading and you have sales records, the banker would want to see your sales records. The banker would want to see your bank statements. The renter would want to see the license. So there's documentation and records. Of course, there will be the payment history that comes through now the CRB, and Sam has talked of that history, the score that gives you the historical behavior of the customer. And that goes without saying, the acceptable CRB score, and I think Sam has talked of that. And we're not saying if you are below 400, we are not saying as a bank will not rent to you. We'll still rent to you, but we have to mitigate to say that the person below that score of, I think he gave a score of about 400. Below that score, they are still acceptable. We still rent to you, even the score is 100, but we would want to have to mitigate that to say this customer, this business has shown some tendency of risk. How then do we mitigate? And that's where the conditions come in to say, what conditions then can we put for between the renter and the borrower to ensure that the bank's money, that money is paid back. And then I think the last key thing is the security, and that comes in where it's necessary. We are saying security where it's necessary, because some facilities then would have unsecured status. I think being now going to specific business customers and addressing that question of the time taken to money, we are saying as a bank, we have gone even digital, and CRB has come in handy to help us and say this customer can borrow on phone. This is let's say that is money on the phone. This is in less than a minute, you're able to access funding up to 1 million shillings. And that is the benefit of now the CRB score that Sam talked of. We'll go through that score, and once you meet the criteria, within less than a minute, you have the money on phone. That is up to $1 million shillings based on the CRB score. So then what do you need to ensure that you qualify for $1 million or even a higher limit? Is basically the cash flows have to come to cooperative bank. You need to have a business current account, what you call the MSME package, and that account need to have the cash flows coming in. Then the favorable score, just I quote some as talked of. And again, you also need to be operating the phone banking, COP online, and the MCOP cash for cooperative bank for you to access that money. So that is one of the biggest benefits that CRB has brought in to customers, in that you can access your money in less than a minute from institutions and from several other institutions, but specifically from COP Bank. We are saying for the business customer, you can access $1 million on phone at less than a minute. As far as your score is good, and you are saying for this facility, it can run. It runs concurrently with other working capital needs. It can run with concurrently with a mortgage. It can run concurrently with an asset finance. And how do we treat this? It looks like sort of an emergency. To say this facility is available 24/7. As a business person, we require money very early in the morning or late in the night, where the bank, where you cannot physically visit a bank. I think what you are saying with that, you can be able to access your money even up to $1 million, depending on your score, the score of your account. And I think that is now the key benefit that credit reference bureaus have brought into the lending market. I think the other thing, as we go to the next slide, is to say we have several other solutions. We have even unsecured facilities that come in based on the cash flow. So $1 million is not the max. The maximum that you can borrow as unsecured, although this one now will not come on phone, from cooperative bank, if you're operating an MSME gold package account, you can borrow up to 10 million unsecured. It ranges between 1 million to 10 million unsecured. That means you do not have to have any collateral. The only thing that you need to have with us is an operational account, your cash flows, and all the banking coming to cooperative bank. The other facilities that we offer is the asset finance, and this we are saying is a form of financing extended to acquire or use an asset. And we use that asset as a security, meaning if you are to buy a motor vehicle, we use that motor vehicle as security. We do not have to ask for another security. And I think with that, then there are those other requirements that come in terms of borrowing an asset finance. The next slide is on, Patrick, if you could move on, is on mortgage facilities. And here you are saying, and I think I talked of earlier, the investment capital. You can buy a house and then as an end buyer for in terms of mortgage financing, a ready house that you can go in and buy. I think as a bank, then we'll rent to you. We can do construction financing as a bank, I think, as a second one, to say you have a property and you want to do construction, and this could either be your home or rental, residential rentals, or even office rentals. I think those ones we are saying we can do construction financing. The third area that we cover under mortgage financing is also what we call equity release. And equity release means you have maybe drawn money out of your business and bought a property. You have drawn money out of your business and you did construction. So by equity release, you are saying we can now finance you that money back to the business. Then we have landlord financing, and this is specific to now the landlords, people who are in whose day-to-day business is on provision of housing, the people we call the landlords. Into the next discussion is the financing. What do you require for a mortgage? I think I would go through that because basically you have to submit an application, but I wouldn't want to go to all those details that you have captured there. It's just to say that you have to submit an application to the bank for appraisal, and there will be several needs that several stages that you undergo in terms of now determining at the end of the day whether you qualify or not. I think I wouldn't want to go to all those details of that. But I think linking now my discussion to what Sam talked of is how do you maintain a high credit score? And some talked of a credit score, the highest being 900. How do you maintain a high credit score as a business customer? I think this is very important to say. As a customer, when you are applying, their own purpose needs to come out very clear. Identify and quantify the needs. And this will help you now as a customer in terms of saying, this is my need, this is the much I need, and it is to my capacity. So that gives you a good repayment history that helps you in terms of improving the credit score. So the better you pay, the higher the score that, the higher the CRB score that you get. So your repayment history then comes in handy to say, this has been a good payer, the higher the score. The second thing is to ensure that as you negotiate your terms with the bank, that you get the best credit structure. And by credit structure, we are saying you need to match the needs with the credit facility type. And this is what is to say, if you are then looking for working capital, you have to go for a short-term facility. If you are looking for investment capital, then you have to talk to your bank to ensure that you get a long-term facility, and be open to the bank, be open to the relationship manager to say, this is exactly what I want to do, so that at the end of the day, that matches, the need matches with the facility that the banker will offer to you. And on several occasions, we've seen customers, especially the MSME customers, coming in for a short-term facility to go put up a house. At the end of the day, that gives you a mismatch in the facility, and that mismatch then comes into you come into struggle, and it will affect the score that you get. I think that is very key in terms of determining then how do I improve my score. Number one is a credit structure and a clear identification of the amount required and the needs, so that you find the specific need without a diversion or those other things, to ensure that you improve on your credit score. The second thing is on how then you manage your loan management, what we call the loan management. And under loan management, as you engage with the banker, I think it will be very critical that you get to understand what we call a repayment schedule. And a repayment schedule gives you the specific days that you are supposed to pay. As an example, to say, if you agree with the banker that you are supposed to pay on 5th of every month, it means that date is what you need to honor, the 5th day of the month. Anything going beyond that, maybe you go to the 6th to the 7th, it starts manifesting some struggle on the customer. So ensure you stick to what you call now the repayment schedule, and that mark it somewhere to say, I'm supposed to pay on 5th. By 5th, my money should be there to enable me pay the loan. I think it helps you in terms of improving. So that timely repayment helps you in terms of improving the credit score. The issue of sales collection solutions, and this comes in handy to say what comes into your account as a customer. So it's not to say that once I borrow a facility, I'm supposed to pay on 5th, I'll only bring the money on 4th to the bank. The more you utilize that account, the more it makes you, it improves on your credit score from the bank. So to ensure that you bring all the turnovers, at the end of the day, the bank will only recover the agreed installment. If it's agreed, we agreed to recover 50,000 on 5th, that is what we recover. But you can bring all this, you need to bring in all the sales and ensure that you have what we call a collection solution from the bank. If it's issues, if you are collecting through maybe Lipa na M-Pesa, we have a facility to terminate that money into your bank account. It helps improve your score. The turnovers that come into the account, the bankings that come into your accounts helps improve the score. Channel all sales proceeds to your bank account. I think that is also very critical to ensure that anything that you sell, all the sales that come in, if I funded you under working capital, I would want to see all that money coming in, and then for you is to move that money. I know you have obligations to pay, maybe your suppliers, you have obligation to pay salaries, you have obligation to continue buying stocks. That money should come in, then you buy your stocks, or you meet your other obligations. I think the other critical thing that would help you in terms of improving the credit score is avoid diversion of funds. And diversion of funds, what I mean is to say you have taken working capital, you have come to borrow to go increase your stocks as a business customer, and then you go buy a plot, you go buy a car, you go buy go improve on on your house, or that money goes again to personal consumption. Avoid that diversion. So it's very critical as you borrow, you know very well this money needs to, wherever it's going, that's where I take it. It will help you, because at the end of the day, if you divert, it will mean you struggle in terms of the payment. And that helps you now again improve the credit score. The other thing that comes in, and this is very important, is where you see that your business is manifesting some signs of distress, which is given. Most maybe there are seasons that the business is not doing well. Mostly like now the COVID period that you are in, what comes in to enable you meet the installment on the specific date is that you can have an arrangement with your bank to build your cash build-ups. And that is to the extent of the installments. So meaning, if I'm paying maybe 60,000 a month, it means maybe it's how much? It's 2,000 a day. Can I have that habit of building that installment, that 2,000 on a day, so that on daily basis, so that by the 30th day, I'm able to meet my 60,000 repayment. So cash builders helps you in terms of avoiding the last minute rush to say I'm looking for 60,000 and it must be 60,000, but that build up helps you in terms of enabling you meet the installment, and it comes in handy in terms of improving your score. You can open a separate account, a savings account, that will help you in terms of repayment as you operate the other business accounts. I think the other thing that also helps you in terms of improving the score is keeping your relationship manager or your branch manager on any developments that happen in your business. For example, as we say, maybe under this COVID period, your business is experiencing low sales. Maybe you have increased orders, or you have some trends that are emerging. Keep your manager, your relationship manager, or your business banker, the branch manager informed, because at the end of the day, they will have to have an explanation to say, so and so is not meeting their installments because they had expressed, they had indicated that their sales are low. And this helps you now in terms of now agreeing with the manager or the business banker. How then do I tackle my issues if I'm struggling to repay? Avoid over, and as I said at that point, is avoid overborrowing and multiple borrowings from various financial institutions. This comes in to say, if you overborrow, if you overcommit yourself as a business customer, at the end of the day, a ball will drop somewhere. So let's avoid that portion of borrowing, avoid that overborrowing and multi-borrowing from several institutions. The other part in terms is the loan arrears management, which is very critical. And I think what you are saying, we appreciate, and every business person would appreciate that some businesses will have a low and a high. And at one time, maybe you go into arrears. At one time, you see I'm struggling in terms of payments. And what you are saying is rush with the manager in exploring some few ways. Number one, in case you are struggling, the bank can always offer you a moratorium in terms of saying this month I'm struggling, I may not be able to pay. The bank can even offer refinancing, and that this comes in when we are saying my business is not doing well. I need more money to improve my business. I may have borrowed to do a construction. I didn't complete it. I didn't go into whatever I borrowed has not gone into useful consumption. Can the bank then refinance? So we can also refinance. So if you are struggling out there, you have been given money and perhaps there was an anticipation it wasn't adequate, the banks are open to refinancing. And I think that the third one is the issue of restructure. And by restructure, what I mean, if you are struggling, the bank can also offer you some extended period. The bank can also reduce the repayment installment to match your current cash flows. We are in a time that most businesses have reduced cash flows, and this comes in handy to say, what then can the bank support you? And that is what we now call restructure. I think with that, Patrick, I've come to the end of my discussion, and I would want to ask my customers to post any questions to the chat as we invite back to you, Patrick.
Thank you. Thank you, Moses. Thank you for your insights around and also bringing the association between CRB and the actual access to funding. I think what I'll also request, because I can see quite a number of questions coming through, is that you stay on to the very end so that we can take quite a number of questions that are coming through. I'll still encourage you, keep sending in the messages. You can do an email, do a chat, or also call us on the numbers that we had given earlier. Mary from Nairobi, I think you've asked a very interesting question, and Mary is asking, Mary works in Nairobi and works for a private company. And she's asking, is there a way that you can work with with the private sector to enable employees get reasonable loans? Now, Mary, please stay on because our next speaker will be actually speaking to this. And just before I invite the next speaker, you realize that most of the business people and those of us who are on this call, you have employees working under you. And considering that the employees also have their personal needs, they want to buy property, they want to, they want to grow, they want to develop themselves personally. It would be important for us also to look at their personal needs, of course, at the personal level. And for this reason, the bank also has specific financial solutions that will help you to avoid disruption in your business. What I mean by this is that these solutions will help the customers, rather your employees, continue with your business, continue working for you without any disruptions. And to this end, our next speaker will shed light on the solutions that are available to the retail customer, similar to what Mary was alluding to in the earlier question. And for this, I want to welcome Jackson Mwendo, who is sitting in for the head of retail banking at Cooperative Bank, to advise us through this. Jackson, when you're ready.
Thank you, Patrick. Can you get me?
Yes, I can hear you loud and clear.
Thank you. Thank you, Patrick, Group Managing Director, Metro West Africa, Moses Gitau, my fellow colleagues and our customers. Good afternoon. My name is Jackson Mwendo, Head Consumer Banking, standing in for Lena Yego. We'll be talking about the individual customers, salaried customers. Moses has talked about the business customers. Now we are going personal to the individual customer. How do we support the individual customer? Which solutions do we have for the individual customer? And we are starting with I talk about two lines. That is, which accounts do we offer to the individual customers that will lead to which lending solutions you can access. And for us, we focus on the children. We also have the youth, and then the young adults, and also we focus on the employed. And that's what we'll be talking about. Again, on the lending solutions, we'll be also talking about the personal loans. We have the mobile loans. We have asset finance and mortgage. All these are eligible to the individual salaried customers. That's what we'll be discussing in the next slide. On the slide, just to put into context, all of us, mostly, not all of us, but some of us, we have children. And as a bank, we've been able to have a solution that take care of the children. We call it Jumbo Junior. This is an account that is designed for those below 18 years, from birth to 18 years. And this is a saving account that it brings the saving culture to our children at an early age. And for this account, we normally give several items to the children, free birthday cards at their birthday. Then we also give an early bank, and also we have a discounted. This is a transaction account which earns interest. So to our customers, look at this account for your children, start saving for the children. Let them know they have an account where they can save a little for their future as they grow up. We also have an account for the youth. This is all the students. It's called the year account. This account which is focusing after 18 years. Once you graduate from the Jumbo Junior, we have an account now that will support the youth and also the students who are going to the colleges. And this account for ages between 18 to 35 years. And all these accounts has access to mobile banking. For this account, opening balance is nil, and we give discounted checks to the students as they pay their school fees. And then you can also receive your salary through this account. These are for the young adults who have gotten into employment. Now, the major one is now the employed customers who are on the call with us. And for this one, we offer the COP salary account. This account that gives you entry to our lending solutions. That is both the mobile and the personal loan, the asset finance and the mortgage. And this account that we will use to pay to get your salary paid by your employer, or the MSME customers we have to have your employees pay salary through. Initially, long time people used to be paid cash, but currently no employers are allowing to pay cash. So we've designed this account to accommodate salaried customers to receive their salary. It has access to mobile banking. You'll sign to where you can access your funds anywhere, anytime. The account has no opening balance, the operating balance is nil, and it has no monthly maintenance fee. So this account that gives you access to the various lending solutions and retail banking. Tied to the salary account, we also have an account we call a KIMA account. It's a saving account. We believe once you receive your salary, you expect you put aside a little for savings. We've designed this account. The salary account has access 24/7. You can access your money through the ATM. You can access your money through the mobile banking. But not for the KIMA account. Once you put your money on the KIMA account, you can only access it through the branch. You have to go to a branch. You can only withdraw once in every 3 months. This gives a bit of security in limiting the access, and you can save depending on the purpose you want to save. You want to save for school fees, you can set your target on that account, and ensure every month you put a standing order on that account, and ensure it saves for that particular purpose. For that account, again, you'll put a standing order, which will come from your salary account, so that once you see the salary, it takes a bit of it and saves for you. So encourage, again, our customers on the call to go for the KIMA savings account to ensure you have savings tied to your salary. Again, from the retail banking, we also look at the top-notch customers, the executive customers. We have an executive current account. These are propositions that serves the affluent, and this one, it has a dedicated senders for these customers, and also they get competitive rates for these customers. And this is an account that will target the high-end customers, the CEOs of the institutions that we are working with, and the customers will have access to dedicated banking halls and centers at the bank. Now, the next line is on the lending solution, which I said is tied to the account up there, salary account. As a bank, we offer core personal loan. This core personal loan is tied to the salary credit that you get. And for you to get a personal loan, the first qualification is for you to be salaried. That means you are receiving a salary from the employer. It might be having an account in core bank or not in core bank. At the point of application is when we request you change your pay point to the bank. And for this one, we offer in 2 ways the core personal loan. We have the check-off and then check-off. Check-off is where we have an agreement with the employer to deduct the monthly payment and remit to us. And that one we normally discuss and agree with the employer. And the amount you take will advise the employer, and ensure on a monthly basis, the employer deduct for your payslip and remit the funds to the bank. On the other side, we also have an check-off. This is where we have not been able to have an agreement with the employer. And by the virtue of sending your salary to the bank, we'll be able to offer a personal loan to customers, and then we'll be able to deduct from your account at the end of the month. That is for personal loan. The minimum we give on personal loan is 50,000, and the maximum we give is 4 million all the way to 6 million, depending on the employer and the terms agreed with your employer. Then we have also extended our maximum tenor to 96 months. That's the tenor we are giving for personal loans, and they will be able to access more funds. Again, the other factor on a personal loan is the employment status. That means if you are on contract, you are intern, permanent, casual, that will be a determining factor again, how much you can qualify. We've talked about the CRB, the issue of a CRB. It will come into factor. If you are negatively listed, we request to know why you are negatively listed, and if you'll be able to clear, we'll be able to discuss how to support you. Then for this loan, it's for the personal loan, we don't request for security for up to the maximum unsecured amount, and the amounts can be disbursed within 24 hours based on if you do the application. We also offer top-up for the personal loans after 6 months once you apply, and we also do debt refinancing. This is where you have loans with other competitors, microfinance and other banks. We are able to combine all the loans into one and ensure we improve on your repayment ability so that you can manage the finances. If you have liable amounts above the secured limit, we request for security so that we can support. Then the next part I would want to talk on is the mobile loans. This is for the salaried customers. Again, based on the salary account that we mentioned, when you open the salary account, you'll be eligible to access mobile loans. This is eligible to salaried customers. We look at the salary credits into your account. I'll be able to give you a limit, how much you can qualify. If you open your account, at least you receive your first salary credit. We'll give you a limit based on the salary received. But for you to access now the mobile loan, you must have an active salary account and you must be registered to the mobile banking. That is the *667#. That's how you'll access the money. It's instant. The moment you do if you have the limit and you receive salary through *67#, you'll be able to access the amount allocated. For this one, the limit is based on your salary. We normally give 3 times your salary. That is 150%. But now, when your repayment has been good, your repayment history has been good, we normally extend the limit to 200% of your net. That is 4 times of your net. But these loans are paid within 3 months. That is within, you can apply for 1 month, 2 months, and 3 months. The maximum we allow for salaried customers is 500,000. And also on this one, you can also access a top-up for the mobile loan. If you repay the first month, we can allow you to access a top-up and combine the 2 months pending and the balance. This loan is tailored to take care of your emergency needs. That is, you need to take care of the short-term needs. It's not a loan for investment for long-term needs. And that's why it's more of a salary advance. We do the recovery at the end of the month once you receive your salary. And again, this facility can run concurrently with other products. That is, if you have a personal loan, you still access the salary advance. If you have a mortgage, asset finance, you'll be allowed to access the mobile loan. Again, you also have, apart from the mobile loan, we also have a branch flexi. If you walk into a branch, we have another short-term product, which is 12 months, which you can access 12 months alone with a repayment of the 12 months. But this one is based on, again, on your salary. You are given 4 times your salary, and then you'll pay within 12 months. I've seen some queries requesting for extension. So we have those 2 products. We have the short-term one, which is done online, and the maximum is 3 months. We have another one at the branch. It's not online, which again, you'll pay within a maximum of 12 months. Then now we have the personal loan, which goes to a maximum of 96 months. So as you look at your needs, you can see which one fits you, starting with the one for 3 months, 12 months, and then the personal loan for 96 months. The next part is just to add on what we discussed on the Metropole, how to maintain a good credit score. And for us, looking at our customers, the repayment is coming from your salary. And for one, is a timely loan repayment. If you're paying a loan on timely, it will make it easier for you to continue accessing. Then there's an early engagement with the bank in case of foreseen loan repayment. We've seen this come from where we are getting a check off again. We've seen employers supporting to advise us that to be late payment, and then we've been able to support. Again, the other issue I would want to mention is accessing the money when need. Again, with the availability of the money on the mobile, again, when you walk in a branch, you get the personal loan. Sometimes you can also make a wrong credit decision by accessing all the funds at the same time. Then the repayment becomes a challenge. So my request to our customers on the call is access when they need and when you are clear what to do with the money. Again, understand all the terms as you do the application. Kindly, I've seen sometimes we apply for the short term. That's the mobile, high amounts. We give 500 and you're supposed to pay in 3 months, then it becomes a challenge to you. So depending on the need, you can go for the personal loan or go for the short term, that is the mobile, and then you'll be able to have a good repayment. Again, avoid multi-borrowing. We've seen cases where you'll access the mobile loan, access the personal loan, and also access from other competitors. And you'll find the microfinance, the SACCO, they are on your payslip. Then in the long run, you'll find the payslip is not looking good, and you'll end up having challenges in repayment, which will affect again your credit score. Remember, for all these loans, the one for the 3 months, the 12 months, and the personal loan in 6 months, your credit score, how your history looks at CRB will determine whether we'll give you the loan. So ensure you keep a credit score by avoiding this. Then again, for the ones who are getting from checkoff, where there's delayed capture of data by employer, we've seen where you get a loan and it takes a bit of time before the employer effects on the payslip. That means the loan is expecting repayment at the bank, but on your side you are receiving the full salary. Again, if you find yourself in such a situation, our request is you ensure you come to the bank and they repay from your salary. Because this will make your history in terms of repayment be good. So don't wait to say, I'm waiting for the employer to effect. If the employer delays for 3 months, that means that the bank side, you'll be also late by 3 months. So ensure you also work on that one if it happens. Again, when you access the mobile loans and the one for the branch flex, and also the one which is not on checkoff, they are deducted from your salary account. Kindly, for the customers, don't change your pay point when the loan is running. It will lead to non-payment. Again, it will affect your credit rating. So ensure you clear your loan on one side, on the bank you're operating, and then now you can change to the other side to ensure you give a clean record on it. Then again, discipline to all of us. When the salary comes in, we've noted issues where again, you know you're supposed to pay a portion of it, a portion is supposed to pay a loan, but because you have access through the mobile and the ATM, you withdraw before the ATM. Again, that will affect your credit score, because you withdraw the money, there will be no money to repay the loan. Also work on that one. Where you have a challenge, kindly engage the branch to ensure you agree on what solutions can be offered to you based on your current salary level. Again, access the correct loan product for the correct need. I think I've talked about this one. Don't access a mobile loan for an investment, while you can access a personal loan, which is a long-term and investment. All this one, if you work on this one, it will improve from your credit score, and whichever institution you'll go, you'll be able to access borrowing without challenge. From where we are, we've seen for the salaried customers, we've seen layoffs and paid leave and also reduced salaries as the issues of affecting default. And there's also the character, the individual, where you want to change your salary. So based on each of these lines, you can walk into any of the branch of CoBank and see how you can be supported to ensure you maintain your credit rating in the right position. Again, if you work in the bank will offer support to customers if you have challenges, and for this one, we'll give grace periods. We also work on the reduced monthly installment and also the restructure. A restructure will support to prolong the repayment period. If you have a reduced salary, a restructure will support you to increase the repayment period, and then you'll be able to repay the loan and also have something for your daily needs. Thank you for listening to me. That's all I had for the salaried customers. Back to you, Patrick.
Thank you, Jackson. Thank you for that session. I think it was also very informative, as you can see from Eric Munyobi, who says that he was in another meeting and could not view. Are we able to share? Yes, let me confirm that we'll be able to share the slides, of course, for your reference, and of course for you to listen in future. Ladies and gentlemen, having listened to all the speakers of the day, I think our lines are still open and you can continue the conversation on the chat below, or also send an email to businessbanking@cobank.co.ke. And I think, as promised, it would only be fair for us to respond to a few questions during the Q&A session. And for this, I'd kindly request that Jackson Wendo, Moses Gitau, and MD Samuel Omukoko to be on the lookout to respond to the queries that we have. I know it's about 12:26, but we'd want in the next 10-15 minutes at most to respond to the questions, some of the questions that have come through, of course, for the benefit of us all on this call. And I think I would want to invite the MD, Samuel Omukoko, MD Metropole, to take the first set of questions which have come through. Bwana MD, are you on? Mr. Omukoko, you're ready? You could take the first set of questions. Okay, Mr. Get.
Just, what was the question?
Sorry, I have a few questions I would want you to take with regard to your, which are aligned to the presentation you made.
Yes.
And the first question, which has come from Salome, is when you've cleared all loans, how long does it take for CRB to clear you if you are initially a defaulter? How long would it take you to clear a defaulter from a negative listing? That is from Salome. Would you take that one first?
What normally happens is that if you had a loan and you ran into problems and you defaulted, and then you worked hard and got to clear it, first thing is that the lender will send all the information that relates to the clearance of the facility to the bureau, and as the bureau, we will update that account immediately. If you check the bureau profile after the account has been updated, you will notice that the loan profile would have been updated and your credit score will have changed. There are some lenders, if after that you try to seek for further facilities, some lenders may ask for a clearance certificate, others may not ask for that clearance certificate. But I think because lenders have access to the records online, that may not be a problem. So it is as quickly as the time we get the update information into your profile.
Okay, thank you. Thank you, Bwana MD. Maybe you could take another three. One is from Anonymous. How does the credit score of the organization I work for affect me in accessing a loan as an individual? How does the credit score of the organization I work for affect me in accessing a loan as an individual?
Currently, when we compute a credit score is only based on information on your credit profile and will not take into account any other information outside of what is on your credit profile. Therefore, your employer's credit score will not impact your own personal credit score.
Okay, thank you. Thank you. I think that is well articulated. It was from Anonymous. I hope that responds to your question. If not, the lines are still open. You can send another message and we'll get back to you. Bwana MD, we have two more that you could take with regard to CRB. This one also came from Anonymous. How do I check my CRB listing, i.e., what is the procedure of ensuring that an individual is delisted from the negative listing on the CRB platform?
To check your credit score in our CRB system, there are two ways. You can dial *433# on your Safaricom line, and it will give you the steps that you follow. And when you complete the registration, you will get a free credit report, which contains all the details that are on your credit profile. Or you can go to the Google App Store and download our application called Cristobal. Cristobal is then, if you install Cristobal, then it allows you to access various aspects of your credit score. You can see who has listed you, you can see your credit score, you can get your credit report, and you can get subscription alerts that will always give you information whenever important aspects of your credit score changes, like your balances, your score itself, and any other thing that happens to your credit profile. Now, in terms of getting delisted, I think it's a perception that I tried to explain earlier on, that today, if you are accessing credit in this market, your profile will always be with the credit reference bureaus. The point is that when your profile is with the bureau, it would reflect all loans that you have taken, the ones that you have paid off, and the ones that you're still servicing, and all this will be summarized in the credit score. People used to say, take me outside of the credit reference bureau file. And that means that was the time when the credit reference bureau only had negative listing. So once you pay your loan, then you'll be taken off the credit reference bureau because now you are okay. But in today's reporting, the Credit Reference Bureau has both positive and negative loans that you service. So it is important that you stay on the Reference Bureau, and staying on the Reference Bureau is just to ensure that you maintain a good credit score, which will always access you to credit facilities whenever you need loans.
Thank you, Bona MD. I think I may not ask the last question because it's tied, rather the response would be similar to what you've given for the first question, which was how, it was also from Anonymous, how will I know my credit score as a customer? And I think your answer is very clear to that. Star 433 hash is the USSD to dial or to download Crystal Ball. I hope that answers the question by Anonymous, and we'll be able to be guided accordingly. A number of questions are coming through, and we may not be able to respond to all these questions in this very forum. And for that reason, I'll request you take the next category of questions, which would be directed to Moses Getao. My assurance is that we'll be able to respond to these questions separately outside this very session in the interest of time. So Moses, if you may, probably you could take another 4 or 5 questions which have come through. And the first one is from Stephen. And Stephen has asked a question. I have a registered business and I need capital to start off. How do we move on this? Moses?
Thank you. Stephen, he has a registered business and I assume he's in business. I think the next thing, Stephen, you require is to see our branch, the nearest branch to you. That is our branch manager or the relationship manager. They will guide you into the next steps in terms of application. But the basics is that you need to have an account, that the turnovers, the sales process should be coming into that account. But you can get more details in terms of the next step from the branch manager or the relationship manager in your nearest branch. Thank you.
Thank you, Moses. I think, Stephen, that addresses the question you had. If not, please feel free to walk into any branch, the branch that would be convenient for you, and you should get an answer. You should get a response to how to get on from there. So Moses, still for you, what percentage do you offer for asset finance loans?
Thank you. Again, we are regulated by central bank, and all our rates, we are now at 13% in terms of the lending rates. I assume that question was on the lending rates, Patrick. So we are regulated.
Yes, go on.
Yeah, we are regulated and we are currently at 13% on all lending. Thank you.
Okay, the interpretation we had on this end was probably on the percentage relative to the asset being bought. Does the bank work with a certain percentage? Yes. Maybe take also look at it from that angle.
Yeah, from that angle, then I would say that we are in partnership with several motor vehicle dealers. And specifically for new motor vehicles, we are in partnership with all dealers of the new motor vehicles. We are at 95, we have a scheme at 95% financing, 5% owner contribution. Some vehicles, some models, we are at 80%, but majorly we are at between 85 and 80 and 95%. Majority at 95%, especially for the new motor vehicles, both commercial and private.
Okay, thank you. Thank you for clarifying that. This was from Anonymous. I hope you feel answered. If not, please feel free to still reach out to us and we'll be more than glad to clarify further. Beldina Chieng has asked a very interesting question. I know somebody who has a running facility, a running asset finance with their bank. I presume this is a friend or a relative. And is it possible for the bank to advance a mortgage loan for a residential property? Moses, I presume the question is, if somebody has a running asset finance loan, can they be advanced another facility, say another mortgage loan facility or something? Moses?
Thank you, Patrick. Beldina, the answer is yes. And the only thing that we'll be looking at is the capacity to repay the two facilities concurrently.
Yeah, so Beldin, feel free, provided your income allows, you can get a secondary or even a third facility pegged, of course, on your income. Moses, as you were talking, Dominic posed a question. Dominic is from Embu, and he would want you to explain again what the moratorium is all about. You talked about the moratorium, and maybe you can shed more light around that, Moses.
Thank you, Patrick. Moratorium, what you are saying is that we can offer you some extended period in terms of repayment, and in terms of accommodation, just to say that for this period, we say we do not pay either principal or interest. So that is an accommodation that allows you maybe some, let me call it some breather, to give you some space to maybe recuperate, or even as we are undergoing the COVID situation, I think several people have been affected. And one of the biggest benefits we pass to our customers was moratorium, where we said that rather we came into an agreement with the customer to first of all suspend maybe any repayment to the bank, and for a period of maybe 3 months or so, depending with the situation of the business. And this is discussed on case-to-case basis with the customer, depending on the situation of the business or the situation of the customer.
Okay, thank you, Moses. Dominic, that's a response for the question you had, but feel free also to shoot more, and we could get back if it's not clear. The last question for you, Moses, what are the requirements for a capital financing loan? Or rather, what do I need to put together? That is from Charles.
I didn't get that one clearly, Patrick. The question from Charles.
Charles is asking, what are the requirements for a capital financing loan? In other words, what does he need to put together?
What does he need to put together? Capital,
yes.
Is it working capital? Or
yes, working capital. Yes, working capital. Sorry.
Working capital. Yeah, thank you. And I think what then for working capital, you have to be in business because the purpose then when we say working capital is the day-to-day operations of the business. So number one is you have to be in business. Number two, you have to have a bank account. Number three is that bank account needs to be to have cash flows being funded in terms of the day-to-day sales that you have. Then the fourth thing that we'll be looking at is a score, and I think we have discussed more of the CRB score. And there are several aspects. In case it requires security, then we'd also be looking for security. But I think then for Charles is to say that again, you could also get more insights from the branch, depending on the kind of business, because I may not be very specific to the kind of business that you're doing, but what I've covered is a broad requirements for a business customer looking for working capital.
Thank you, Moses. Thank you, Charles, and everybody who's posed questions around business banking. I think we may not be able to take all questions around that, but allow me to move to the next set of questions, which now are to the third presenter, who is Jackson. Jackson, you could take about 5, even as we take the others personally. William and Ruth have asked a similar question, and I'll look at it from William's perspective. I am employed on 6 months renewable contracts, which I have religiously renewed. Can I qualify for a loan as my salary passes through Cooperative Bank? Jackson?
Thank you, Patrick. Yes, they can qualify for a loan, but we'll have to look at the number of times the contract has been renewed, and also get a bit of discussion with the employer. It can be considered.
Okay, so William and Ruth, it can be done. Just walk in. Let's engage further and see how we can come in. Jackson, still for you. Duncan was asking, what is the difference between young salaried persons using year account and a salary account? Or rather, what is the difference between the year account and the salary account? Jackson?
Thank you, Patrick. The salary account, as I mentioned, is tailored for all employed persons to use it to receive their salary. So it's eligible to any Kenyan who is employed from 18 years and above. Year account is tailored for the youth, being from 18 years to 35 years, and especially focusing on college students.
Okay, that was from Duncan, and I think that's a well-phrased response to that question. Tied to that, Jackson, can one upgrade the year account to a salary account, or one has to open a new one altogether? Jackson?
Yeah, you need to open a new account so that the only difference is the way the account is structured. But for the account, you can still receive a salary, but you can also you need to open another one so that you get the real salary account. But the year account receiving a salary enjoys the same benefits as a salary account.
Okay, thank you, Jackson. I would want you to take the last two. There's one from Benjamin who was asking, what do I need to change from the current account to be banked under executive banking? Jackson?
Thank you, Patrick and Benjamin. What you need is there are two ways you can access executive banking. You can use the same account you're having and now enroll to the service of executive banking, or you can open a different account, the executive account. So you just need to walk into a branch and request for the executive service. You'll be enrolled. Then now you'll be enjoying the executive service.
So Benjamin, you can walk into any branch in your area and seek to see the services under executive banking, and you can also be enrolled. Jackson, we have a last question here. Incidentally, it's also from Jackson, who is salaried and has a running loan with the bank. Can I get a property development loan or a loan to buy land or to buy a car? I know Moses had alluded to to a similar, or rather had responded to a similar question, but Jackson, would you kindly take that from the gentleman by the name of Jackson, please?
Thank you, Patrick. And to respond to Jackson, yes, you can. This will be based on your salary, that is your payslip. You will be able to accommodate the repayment ability. Remember, for salary customers, we take a maximum of 2/3 of their gross as regulated by the labor laws. So if it allows, you'll be allowed to access.
Okay, Jackson. Thank you,
Patrick,
Jackson. And yes?
Yes.
Yes.
I can comment on what I've seen on the chat.
Please go ahead.
Access to eFlexi is just to clarify it's available to all customers, both civil servants and private firms. I've seen Wayne Dirangu was asking whether it is available to private firms. Yes, it is available to private firms. Even the MSMEs, when they call, if their employees open accounts with us and they pay the salary, they will be eligible to access the eFlexi. Thank you.
Thank you, Jackson. And thank you, everybody, for the questions that have come through. Incidentally, in the interest of time, we may not be able to take all these questions, but our promise to you is that we shall get back to you by way of email. So it would be good for you also to share your email address so that in addition to the slides that we shall be sharing with you, we could also respond to the questions that have come through, albeit at a personal level. And ladies and gentlemen, in the interest of time, as we near the end of this session, I would want to invite the head of business banking, Mr. Moses Gitau, to make his closing remarks and a vote of thanks even as we progress. Moses, if you could.
Thank you. Thank you, Patrick. And let me start by thanking all our customers, for the people who attended. I think we've gotten your feedback. I know we may not have tackled everything, but as Patrick has promised, I think we'll get back to you in terms of the feedback. We'll also share these recordings. Thank you so much, Sam Mkoko. I think Sam, today you've done it justice. I know we gave you a session that we felt that we didn't give you adequate time. Today we have given you adequate time, and based on the feedback that we've gotten, I think some CRBs now, perhaps you have sort of demystified the issue on CRB and the linkage between yourselves and the lenders. I believe our customers are now more educated, and perhaps they have more insights now to ensure that they maintain high CRB scores. Thank you very much, Sam, for that, for those insights. My colleague Jackson, thank you also for demystifying this. And I think for this, I would want to tell my MSME customers the way to support your employees. One of the way to motivate your employees is to have them operate bank accounts and move that burden of them borrowing from you or borrowing from your business to the bank. As far as you're able to pay them, move that burden from borrowing from you, because they also have emergencies like any other employed customer. They also have emergencies like any other business customer. Move that move that responsibility from yourself, from your business, because at the end of the day, what happens is that if you are to lend to that person, it ties either it ties your working capital, it ties out your money. But if you pay their salary consistently in the bank, you can move that burden to the bank to ensure that the bank does what it does, and for you, you run your business. To my colleagues in the bank, Patrick and the team managing the call, thank you very much for the organization. And I think as I close, I would want to move to what I call to action for my customers. And is to say between the business bankers and the personal bankers, we have 800 relationship managers across the network. So all our branches have either a personal banker, and a personal banker takes care of the employed customers, what we are calling now the personal customers, salaried people. So in case you have any query, I think see the personal banker. We have a business banker in the branch who deals with the business customers. So as a business customer and you have a query, I think also talk to the business customer. And also our branch managers across the over 150 branches are available to you to just engage and ensure that you move to the next level. I think the other thing is, it's come out very clearly out of the discussion by Sam Mukoko, is to say that for you to maintain a high credit score, is that you have to continuously bank. I would want to encourage my customers to fully bank with us, and in order to get what we call high credit limits. This will be driven by the score. And I think Sam has said, we are now moving to a situation where then perhaps even into the future, banks may not ask for any collateral. They will just go to your credit score, your operations of the account. So ensure you bank with us so that you can qualify. And I think the other thing is that in case you are here and you are struggling, I've seen a number of questions coming in terms of the people who are struggling on unpayment. In case you are here and you are struggling in terms of paying the facilities, I think that then the call to action is to request that you pay the facilities as scheduled in order to have a high credit score. And I think this, we've said, why then do we need to pay them promptly? So my request is that you pay promptly, talk to your branch manager, talk to the branch manager, talk to your relationship manager in case you are undergoing some issue that needs help. Lastly is to say that all these materials, all the webinars we've run, all the materials are deposited in our MSME portal. You can visit that portal for even more education in terms of managing your account. With that, Patrick, I think, thank you so much, and God bless you.
Thank you. Thank you, Moses. Thank you, Moses, for that. And ladies and gentlemen, it's been an interesting close to 2 hours. And we sincerely thank you for staying on to the very end. We shall separately respond to the queries that we could not take live during the session. And we do look forward to continued engagement in days to come. See you again in the coming weeks. Stay safe and God bless. Thank you.